Net sheet, seller's net sheet. How many have heard of them? Well, I tell you, every time you go to sell your home, you're going to want to see one. So let me break it down as to what's actually in a seller's net sheet. Let's talk about a seller net sheet. What is it? For those of you that don't know, it is a breakdown of costs subtracted from the target selling price that is given to a seller when they're thinking of selling their home. This is just an estimate of what they'll make. When selling your home, there's so many things that may change from the time you decide to sell your home to when it actually sells. So a seller net sheet is just an estimate of what the fees are and an estimate of how much you'll make off the sale. You'll start with what price you plan to sell your home for. From that, we'll subtract a few things to come up with an estimate of how much you might make on the sale of your home. First question, how much do you own on the property? First of all, you'll need to know what you owe on your home right now, so you can subtract that first. This number is just an estimate, since when you get to the end of escrow, they will call the mortgage company and get the exact figure, since your interest is prorated by day from the time you started your mortgage. Prorated property tax. Now, you always pay property tax, which you get billed twice a year. If you have unpaid property taxes, they can be prorated until the end of escrow. If you have paid in advance, you are credited a prorated amount from the date of the sale. So this is the second thing that's going to be taken off that net sheet. Homeowners title insurance. This is usually paid for by the seller. Owner's title insurance provides protection to the new homeowner if someone sues and says they have a claim or a lien against the home before they, the new homeowner, purchased it. Sellers, when you purchased your home, you should have received this as well, protecting you from any liens from the previous homeowner. When the buyer purchases your home, they receive a document, most often called a deed, which shows that you transferred your legal ownership or title to your home to the buyer. Now, title insurance can protect the buyer if someone later sues and says that they have a claim against your home while you owned it. Some of the common claims come from the fact if you didn't pay your taxes or you hired contractors while you were owning the home and you didn't pay them, they'll put liens or something against the home. So the title insurance is supposed to dig into this to find out for sure if you've paid everything. Now, they will check as soon as you get into escrow. They run a background on the title. They'll also do it again just before it closes in case any other liens or anything popped up. So they will be checking on that. Escrow fees. Although it can depend on where you live in California, since each county is different and they have their own regulations on how they do this, escrow fees are typically split 50-50 between the buyer and the seller. Natural hazard disclosure. Sellers are required to provide this report so that buyers understand if a home they're considering might be at risk of wildfires, floods, or earthquakes. What does an NHD report include, and what impact might it have on the sale of your home? Good question. Remember, the goal is to make sure that you're informing the buyers of any special risks that may come with the purchase of your home. But that's just a small part of what NHD reports typically cover. An NHD often runs more than 40 pages, and these reports also disclose if a home is impacted by a wide variety of more minor additional potential hazards in your area. Notary fee. Nothing you can do about this one. If you don't have a notary notarize your signature, then you're not selling your property. County transfer tax. So what exactly is real estate transfer tax? Transfer tax is a tax imposed by states, counties, and cities on the transfer of real property from one person or entity to another within the jurisdiction. Who pays transfer tax in Fresno County? The party transferring or conveying title to the property is generally responsible for the payment of the tax. In California, the seller traditionally pays for the transfer tax. Depending on local conditions, transfer tax can be negotiated before the offer is accepted. For instance, in a strong seller's market, the seller may have multiple offers and will likely find a buyer who agrees to pay for the transfer tax. In a buyer's market, it's more likely the seller will end up paying for the tax. The 593 form. When selling a property in California, the state requires a seller to fill out a 593 real estate withholding statement to help the state calculate what tax, if any, you'll be required to pay. And yes, they charge you to do that. HOA fee. If you live in an HOA, your fees must be paid current from the time that you've been living there. If you're behind on them, then that money must be paid by the seller. The seller may also have to pay for HOA transfer tax, which is transferring to the new owner, and pay for copies of the HOA documents, which must be given to the buyer. As a side note, I do have clients that have told me that they want to buy in an HOA community, but they're just not going to pay for the HOA dues because they don't want to. I have to inform you that if you do not pay your HOA dues, they will put late charges on those payments. And if you still don't want to pay for them, they can foreclose on your property and take it from you just because you have not paid your HOA dues. Realtor's commission. Commission is negotiated, so that price may vary quite a lot. Typically, the seller pays for the commission to the listing broker and the buyer's broker. Your agent can explain this to you. Liens and back taxes owed. If you have any liens on your home, they must be paid at the end of escrow, either out of your proceeds or by bringing money into escrow. This can be IRS liens, contractor liens, city liens, credit cards, or other loans that went delinquent and went to a lawyer who put a lien on your property. These are just a few examples. Titles does run a check on the sellers when escrow opens and just before it closes, so that any recorded liens will be found and paid at the end of escrow. Other fees. Other fees vary quite a bit. It could be nothing or it could be higher. What falls under this is if the sellers want to help the buyer with closing costs, or if repairs are needed to be able to sell the home. These can be repairs that the buyer negotiates for or are required by the appraiser so that the buyer's lender will give the buyer the loan they need to purchase your home. So there you have it, an estimated seller's net sheet. There's other things that could pop up that change the numbers on this. This is just an estimate. There's a lot of things that could happen in escrow. So for those of you that stayed to the end, if you look down below, there's a link or two for you to get something free. And there also should be a video right up here that I think you'll find very important for you to watch and give you more information on selling a home here in Fresno, California. Until next time, see ya.